Hey guys, we'll do a quick recap of the NQ and the Russell Scalper from today. And there's actually another thing I want to talk about that it doesn't matter what method or indicators you're using, something to kind of keep in your mind when you're trading. First, I'll go off of this signal. We had an NQ scalper signal long at, what was it? Let's see, oh 05. So from that signal, our exit signal is basically once this moving average goes red, we get a close below. So from the entry to the exit was 34 points. On average, most of the time, we would have multiple entries up to this point, which if you held your second contract until the actual true signal, it doesn't really matter. That's just an easier trade. You don't have to deal with another entry. But on average, we would have at least two signals up to a point like this of a 34 point move. Um, so our outlook from last night on our member video was up, so that can give us confidence to actually continue to hold this trade. We had a 60-minute pattern we've been watching. So what we're looking for is green on the indicators down here. To confirm it, we're looking for green, blue, green. Okay, now when this goes green, we get the arrow. So that's just kind of visually plotted for us. But so basically blue, green, green arrow, we're in the trade long. Now, the thing to think about, no matter what you're using, is the minor and major waves. So even on a small chart, this is a 6 range chart, there's still going to be major and minor waves. Okay, so an example from back here, from this low, this is all one wave. Okay, but you can see that there's multiple waves inside of it. Okay, so and we have specific rules we look for and understand levels before they're hit where the major should complete. But even if you're not using those rules and you see a major move like this happen, okay, so we have this expansion goes into this sideways contraction. So it's going to do two things, either contract sideways or correct back down. Now, if it just goes sideways and contracts, and we get another signal to go long, which was right here, the thinking is we almost have to think backwards of what a normal person would think. A normal person would think we are going to do exactly what we just did right here. Okay, which would mean from here we go up another 34 points. But in reality, it's probably not going to do that. So the thinking is major and minor waves have more value than just saying this is major and this is minor. If the correction or the contraction is minor, it's very high odds that the result is also going to be minor. Okay, and how can that benefit you is when you are in a trade like this, if you get into a trade here thinking it goes up another 34 points, the likelihood of holding it back down to break even is extremely high because you're not trading the reality of the market. Okay, that also works on the other side. If you don't understand the bigger condition, like from last night's video, we're thinking expansion to the upside. That can, if you are not thinking that, that can limit your profit here, right? If you're not trading with the bigger chart, if the bigger chart's going to make a big move, this chart's just trading inside of it. So this chart would look extended, which it does today, because why? The bigger time frame is actually really what's in play. So how that can hurt you is you get in, you make 3 points, you're out, and then you miss this big move, and there's really no other place to enter, at least on this chart. We had a couple other entries on our tick chart, but to make it simple for this video, it's just that thinking of if I'm in, I make 3, I'm out, it's profitable trade, you're happy for a minute, and now all of a sudden, as the day goes on, you're missing this. So now you might have a negative emotion or a thought to go against the trend, okay, and actually go short before you really should. So it could actually work a couple negative ways against you. Okay, so just think if this result tells us, what this result should be. Okay, let's go to the Russell. The Russell had a couple entries today. So the first entry was here, okay, 92 up to 97, okay, so $500 a contract. And you can see how we have basically a one-to-one type move, okay, major wave into same direction contraction. So the contraction doesn't have to be sideways. A contraction can be going up, down, or sideways. So it goes, so this whole thing is still one wave. Okay, it's just this portion of it is more of a contraction. This portion is more of the expansion. It's all one wave. Okay, but once we have that first initial wave, we contract a little bit sideways. From here, from this contraction sideways, we have the contraction up, or minor into minor. Okay, and then what happens into more of a major correction into more of a major signal. Okay, which really this is just a minor wave in a bigger wave that should complete up here. So thinking that ahead of time, what I just said, this entry, this is probably a minor wave to a bigger wave up here. In real time, that's what we're thinking. So we're not trying to short against that. We're looking to get back in long, which would be right here. Okay, but the market closed. So just something to think about when you're trading, no matter what indicator. It's the structure of the market is what you're trading. Everything else is just a tool to try to give you odds on what that structure might be, how far that structure might go. So really good trades on the scalper today. A lot of good emails from our members that caught this, and you could see from the entries, the heat we took was, here was none, here was a couple ticks, but, and you might say, well, here is a better entry. That's not an entry. This is the bottom of this wave. We're never trying to pick here. We're waiting for 4 things to confirm to say up for our long signal. So looking at this, it's the opposite is, if we had a buy signal, would you go short? So the answer is no, so that over time you can build confidence to actually just take the signal, take half off, and trail the rest.